Hello and welcome to BQ Prime. A very good afternoon to all the viewers. One stock that is in focus is NMDC on the back of the numbers that have been reported. Joining us on the show will be Amitava Mukherjee, Chairman cum Managing Director at NMDC to discuss the fourth quarter as well as what's in store going ahead. Welcome to the show, Mr. Mukherjee. Mr. Mukherjee, overall, if you see, we've seen a better performance, and this is mainly on the back of a lower input cost, better realizations, and higher volumes as well in terms of the fourth quarter. Specifically, if you see in terms of the bottom line, uh, has the quarter met your internal expectations?
Yes, this has been the best quarter ever. And if you see the March volumes, 5.5 million ton has never been done in 3 years odd history of NMDC. So we are pretty happy about that. And it also proves that it also sets a benchmark for our future performance. It's been very satisfying. Q4 and March has been very, very satisfying. And happy to note that the momentum continues into the Q1. And April has been the best ever April. So in terms of volumes, yes, it's been a very satisfactory and very commendable past few months. In terms of pricing, of course, there is a pressure. As you know, internationally, the prices have come down very substantially of iron ore. There have been pressures within the country also. The steel prices really haven't shown too much of an upward movement. And there has been a pricing pressure, and I expect that even in Q2, the pricing pressure will continue a little bit because Q2 has historically been the lowest of all the quarters in terms because of monsoon and other things.
Right. So overall, are you expecting this kind of performance to then continue in terms of FY24 as well?
Of course, we are looking for at least in terms of the entire volume at anything between 46 million to 50 million for the FY24. Two factors are important here. One is, of course, the monsoon at Belladina, which produces around in Chhattisgarh, which is two-thirds of our production. And if the monsoon doesn't really get extended as it did last year, so maybe we'll have some comfort there. And the other thing is that Kumaraswamy mine, one of our mines in Karnataka, which is 7 million ton, is stated to go up to 10 million ton. Most of the approvals have already been received. A few are left over. And we expect these approvals to somehow, we expect them to be obtained by the mid-financial year time. And so we'll have half a year to exploit that additional 3 million ton of production capacity. So, and considering all these factors and the fact that now we are in the sort of high performance mode. So taking all these things, I think 46 to 50 million ton should be eminently achievable for FY24. And that should take care of a major problem of the pricing headwinds that are currently we are seeing.
Right. So overall, currently, what's the overall pellet capacity that we have?
Right now, we have a pellet plant of 1.2 million ton that is at Donimalai, and we are making another pellet plant with the slurry pipeline of 2 million ton at Nagarnar, where the steel plant is. This 1.2 million ton pellet plant at Donimalai has actually not been working for the last 4 or 5 years, essentially because it was designed to process slimes. 85% of it is the feed was supposed to be slimes. Unfortunately, due to regulatory issues, we have not been able to take out those slimes and utilize them for pellet making. As a result, the capacity utilization has always been poor, and it has been sort of where the shoe bites. It's been an activity for us for the last 3 or 4 years. But once the regulatory compliances are ensured and the approvals are there, the plant itself is fairly designed to produce more than 1 million ton of pellets there. And I think by end of 2025, we will have the pellet plant at 2 million ton pellet plant at Nagarnar as well.
Right. So overall, what's the kind of investments that we're looking at for this capacity expansion, and how are we funding it?
The capacity expansion, the initial few investments are already underway. The pellet plant at Nagarnar is around 1,200 crores. The slurry pipeline laying itself is around 1,100 crores. The beneficiation plant is around 900 crores. The screening plant 3 at Kirandul is around 5,600 crores. And we have got sanctions for increasing deposit 14 and deposit 11C of Kirandul. That's about 1,100 crores of sanction there. So these are all work in progress, and we expect to drive them very hard, because these are very critical to reaching the 300 million ton targets we have. But we also need to sanction a lot of fresh projects for both for evacuation as well as for production. And most of these are in drawing board now, and definitely in another 2 quarters, or maybe at best 3. So we will have all the sanctions in place so that work can begin in the next financial year. Most of these will be driven by internal accruals. As of now, we are comfortably placed with the cash balances, and we are completely in a position to fund our expansion plans as well.
Right. And in terms of prices, how is the trend looking like? Because China, the iron ore prices have been under pressure. What's the kind of direct implication do we have as a company?
Oh yes, normally your international prices do not affect our domestic prices. But if the international prices keep coming down, then of course we have a major pressure on our price, because then the steel makers or our customers have the option of using imported iron ore rather than domestic iron ore. As of now, it has not happened in the last 2-3 years. There has hardly been any import in the last 2-3 years, because the domestic prices have traditionally been at a fair amount of discount to the international prices. But remember, international prices were around more than $120 then, between $120 to $180 then. Now it has come down to about $100. So naturally, because there's only a 2.5% import duty on iron ore, so naturally, if the prices come down further, it will create a major pressure on us to reduce prices. But we are keenly watching not only the international prices as a factor, but other factors which affect prices.
Right.
We are almost watching on a daily basis, and we are on top.
So currently, what's the kind of NMDC discount to the global iron ore prices? Because I think in the month of May, it's fallen to around 54% versus 57%, which was there in the month of April itself. So how is that equation working around right now?
At current levels, I think at the East Coast will be at a discount of around 30% compared to the international prices on the landed cost basis. And on the West Coast, the margins will be, the spread will be much lesser. It should be around, at the current domestic and the current international prices, it should be around 10 to 15%.
Right. And apart from that, if you see in terms of the raw material price trend as well, what is it and how is it looking like? Because again, if you look at coking coal as well as coke prices, how is that trend and how are you seeing that impact come in?
That impact will come on NMDC Steel Limited, of course, because we do not consume coking coal, we are the miners. And ours, mining is more or less a fixed cost industry. But there has been, of course, input cost pressures, both in terms of staff costs, in terms of cost of fuel, lubricants, maintenance, everything has gone up. But because it's a fixed cost industry, that can be compensated with higher production. So that's something that we are seriously looking at, that we have to increase our production just to keep the overall cost and margin intact. In steel, of course, the coal prices have come down from the historic peaks, but they are still very high. And as you know, the coal does form a very substantial part of the entire cost of steel making. And once we get Nagarnar going by the end of next month, obviously that's something that will affect us also in the Nagarnar.
Right. And very lastly, overall, Mr. Mukherjee, what's the update with regards to where the lithium exploration and mining is concerned in Karnataka? Where are we with that?
Beg your pardon? Can you please question?
I'm saying with regards to where the lithium exploration and mining goes in Karnataka, where are we with that?
Well, we have, nothing has been offered to us in lithium in Karnataka. There have been certain press reports. We have had a cursory glance of it, but no deep dive has been made for us to have an opinion about the viability or the quality or the quantity of resource. We have not made a deep dive of it. And nothing has been offered to us by any of the governments for exploration of very specific minerals.
Right. And lastly, FY24, what's the kind of growth we are anticipating, taking all the uncertainties into consideration as well?
46 should be the minimum cutoff, and we should be, if things go well, we should be able to do 49 or 50. And considering the pricing pressures and increase in volume, I think the overall, we did around 5,500 of net profits this year. I think we will be able to exceed that. Maybe we will not touch the FY22 figures. That looks like a long shot, but yes, exceeding 5,500 by a comfortable margin should not be a major challenge if we reach those ones.
Right. So that's what the outlook is going to look like as well. Thank you, Mr. Mukherjee, so much for joining us on the show. Always a pleasure to speak to you. Stay safe and speak to you soon again.